Hi everyone and welcome to episode 91 of the Rewarding Property Decisions podcast. So welcome back for our fifth year. It's certainly time's flying. I'm really looking forward to getting back into it this year. I've got some great ideas for some topics and I've also got some really good guests in mind to come on. So it should be an exciting year. And as we usually do, we've started off each year with our annual property report. So I thought that was as good a place as any to start this year. Typically, the consensus of this year's report is that we feel as though there's great value and plenty of opportunities within the Melbourne market. And so that's something that we wanted to investigate. We don't necessarily think that'll be within in 2025 in terms of market starting to progress in terms of growth, but the fundamentals are certainly there. And obviously I wanted to go through why that's the case and what our expectations are going forward. Now, if you're on our mailing list, you'll have already received a copy of the property report. If you're not, if you look into the blurb of whatever podcast hosting device you're using, there should be access to it. Otherwise, you can visit our website, wakelin.com.au, and you can download a copy there. So what we'll do first is have a look back at 2024, get a bit of a feel for what we observed, how the market went, and then we'll start to look at some of the major issues that are likely to influence 2025 in terms of a Melbourne property market. So starting with last year, we've sort of started the year last year with a bit of cautious optimism. Expectations were certainly there that interest rates were going to come down at some point during the year. Some were expecting mid-year, probably more often were thinking the second half of the year, but that actually didn't end up materialising. We didn't see those movements that we expected. So with interest rates holding off, there wasn't a switch in terms of growth and perception of the market, which was different compared to the remainder of the country, where Victoria certainly was held back. But the consistent interest rates, which were still a bit higher, didn't prevent other capital city markets from going quite well and performing quite strongly. So it shows you that it's not really interest rates that's holding the Melbourne market back. There are a number of other factors that are affecting that. So these are including the land tax changes, which came in at the start of 2024, which was probably the most consequential from an investor's perspective. What happened there, for those that don't know, is that the threshold for land tax was lowered from a previous $300,000 land value down to $50,000. Now, what that did was it dramatically broadened the scope of properties that were subject to land tax from an investor's perspective. So apartments, for instance, that were previously not subject to land tax, that had a land component of under $300,000, didn't have to worry about it. But when it's dropped to $50,000, there's not many properties that aren't included within that. Another was the changes to rental regulations that came into effect, or will come into effect, in October this year, but it was announced last year. So that certainly had a mindset impact for investors. And what's happening there is there's going to be mandated upgrades around insulation, draft proofing of apartments, and air conditioning. Now, it's an admirable and I think a good thing to be doing. The problem is that it's potentially leading to further rental increases, because investors are feeling as though it's just death by a thousand cuts. There's more and more costs being associated. So with the pressure on the rental market already, which we'll get to in a minute, it's probably having a greater impact on rental figures than perhaps was intended to. And then the final is the Airbnb tax, which is it's called that. It's more targeted at short-term rentals. And what's happening there, that's as of 1st of January this year, but again was announced last year, that short-term rental providers now face a 7.5% levy on short stay accommodation. Now, if you couple that with the powers that now exist for local councils and owners corporation companies to restrict short stay rentals within their jurisdictions, it starts to have a bit of an impact in there. Now, the idea was to convert short stay accommodation into long-term rental properties, but I feel as though there's probably some unintended consequences with this, in that in most instances, I think for those that do decide to retain their property, they'll probably just pass a 70% on to guests of their property, or they may well just decide to sell the property altogether. And as a result, then we still don't get any extra increase in the rental market. So these are factors that are influencing the market, and they've been confirmed in terms of their influence by a number of things that we observed through last year. One of those was from our own inquiries to our own business for people looking for our assistance. Back in 2022, 38% of the inquiries that we received were for people looking to buy investment properties. But by last year, that had dropped down to only 29%. So there'd been certainly a drop there. But we saw from a sale, or what we refer to as a disposal service, that went from 22% of our inquiries in 2022 up to 40% of our inquiries for 2024. So there was certainly more interest in that side of things, which was shown in market conditions as well. Then if we looked at and we noticed that CoreLogic brought out some really interesting statistics on investor loan commitments. So back in September last year for the nation, loan commitments were up almost 19% on 12 months earlier. So there's a significant increase in investor activity in that space, whereas in Victoria, we were only up 5%. And we were coming from a pretty low base because there hasn't been the same levels of interest. So we're not responding in Victoria the same way the rest of the country is. So that's just interesting what we have observed through 2024. So looking ahead for 25, what is likely to happen from a Melbourne market perspective? Now, despite the challenges that we have seen, there really hasn't been a significant reduction, which when the market turns down, you can see a significant reduction in prices. We haven't really seen that. It's just more been a pause and it's been stabilised. It's just that it's been that way for a period of time now. So how is that going to affect us going into 2025? Well, I wrote an article for the Fin Review sort of around September, I think it was last year, looking at median statistics, and that's always a good way to look at comparisons. But you need to be very careful when you're looking at median stats to make sure that you're comparing apples with apples and don't get caught up in just the headline numbers, because they can be misleading if you're not looking at them correctly. And if we look back at it, and a lot of the headline topics were that Melbourne's median dwelling price was consistently being overtaken by other capitals that previously had been below it. Now, Brisbane's been above for a little while, but Adelaide and Perth were also jumping ahead as well. So if you don't analyse that out, it looks as though, well, Melbourne's just dropping and everyone else is jumping ahead. But I think the important thing to understand is that you do need to dig a little bit deeper. And one of the key parts to that is when the stats companies talk about dwellings, they're including every type of residential property. So houses, units, townhouses, apartments, everything is included. So what we did was analysed out Adelaide versus Melbourne, because Adelaide's had a really strong run and it's been doing really, really well. So if we look back at when we wrote this article, was around, as I said, September last year. At that point in time, Adelaide had just jumped ahead of Melbourne. The median dwelling price in Adelaide was $790,000 and Melbourne's was $776,000. So it was legitimately ahead. But breaking that down, if we look just purely at houses and broke it into those segments, the Adelaide housing median price was $830,000. Melbourne's was $944,000. So still significantly above. And if you look at the apartments, Adelaide's apartment market was $546,000. Melbourne's was $610,000. Now, the key thing to understand here is that as a dwelling market, 33% of dwellings within Melbourne are apartments. In Adelaide, it's only 16% of dwellings are apartments. So that's where you get the distortion and the difference. Now, it doesn't take away from the fact that Adelaide, Perth and Brisbane's values have certainly been increasing at far greater rates than what Melbourne's has. But what it does do is show you that Melbourne isn't necessarily dropping down the rung significantly. There's reasons behind it, and it's important to understand that. Another thing looking ahead for this year is the rental market. And certainly through last year from a rental perspective, there was a significant drop in investor-owned properties across last year. Victoria saw a loss of over 24,000 rental properties, according to a report by the state government's Home Loan Victoria Authority. And then also, according to realestate.com.au, Victoria's rental stock has declined by almost 13% over the last decade. So this really highlights the pressure on the rental market. And because what we're seeing when rental properties are being sold at the present time, majority of them are being sold to owner-occupiers, which is a good thing. Obviously, we're getting more people into that housing market, but it means from a rental market perspective, there's not the same availability of property. And with those declining supply levels, and there's still a constant demand with population growth and things, it means that that's still a consistent upward pressure on prices. The vacancy rate as of December last year was still only at 1.8%, so it's still very tight, and that's leading into the first quarter of this year. And typically that's the busiest time, and usually when we see a bit of an uplift in rental prices because there's a lot of people entering the market, and so we usually see prices start to jump. So it's I don't see the rental market slowing down. I don't think it'll necessarily be jumping ahead at the prices that we've seen over the last few years, but I think that there's still going to be increased high levels of competition on that rental market. Another interesting fact coming into this year is we've got our federal election, which is likely to be, according to most media reports, probably April, May at this stage. And I always find it interesting looking at the media coverage and what people think may or may not happen when a federal election or any election is approaching. We quite often notice that people will tend to sit on their hands, whether they're buyers or sellers. It's typically the case when property is a hot topic for an election. So we saw back in, say, 2016 and 2019's federal elections when negative gearing was a big topic, where there were talks about withdrawing it or amending it at different stages. And there was also discussions around capital gains tax entitlements being changed as well. Now, in both instances, they were proposed by the Labor Party, and they lost both of those elections. It was interesting, particularly for 2019, because what ended up happening, the election was in May. For the second half of 2019, the perception in the market was that because it was an unexpected result, the coalition winning that election, that there was a pro-property investment party in power. And so the market started to move through the back end of 2019, and we started to see some pretty good growth leading into the start of 2020. Obviously, COVID hit and things started to change again. But what's likely to happen this year? Well, we're not seeing property as being a major hot topic, and both sides of politics are looking at housing affordability. That's likely to be a big issue, but the way that they're proposing to approach that is more around probably the supply side of things and looking at ways to help get people into those sectors of the market. The coalition's also trying to, or is proposing to allow access to superannuation for certain buyer profiles as well. But I don't think that either of these approaches is likely to have a great impact on the property market from a values perspective, both from an increase or a decrease perspective. So I just don't see there being a significant impact this year. So is Melbourne undervalued? Many of you who are regular listeners to our podcast will know that I quote Richard Wakelin quite regularly, or for obvious reasons. He's a wealth of knowledge. One of my favourite quotes that he puts forward is that around the property market is that the longer a market is held back, the greater the rise will most likely be when that market recovers. Now, Melbourne's been held back, not to a significant extent, but certainly hasn't seen the consistent levels of growth over a multi-year period for an extended period of time now. The last time we probably saw that over a 7-year period was back in the 1990s during the recession that we had to have. And not really much happened from 90 till about 97. And then when it did switch from 97 till about the GFC in 2008, we saw consistent levels of growth. So I think it's been a little bit better than that over the past 7 years, but it hasn't been its normal self. So I think that there's potential coming in that sense. I think that, and again, as we spoke about before, if you look at from the pandemic until now, Melbourne's growth has been around 17%. And you compare that to Sydney, which was 36%, and then Perth, Adelaide and Brisbane have been up in the sort of early to mid 70% mark, each of them. That's significant growth. So they've been performing really well. Melbourne hasn't been anywhere near that. And so I think it's not sitting in its traditional position from a national market perspective. And I think that at some point in time, that will come back. So I think that switch is starting to come, because the fundamentals for Melbourne's property market are still very much there. We've got a very strong economic environment in terms of a city. and things are starting to shift. We've still got fantastic education facilities. Melbourne's known for its schools, its universities, those sorts of things. And we've still got amazing lifestyle opportunities on offer. Recently, according to Forbes magazine, again, voted 4th most livable city in the world and number 1 within this country. So there's still very strong reasons for Melbourne to be a very popular place to live. With that lack of performance that we've seen over the last few years, with the strong rental returns and with the spending on infrastructure that we've seen, albeit some of it perhaps might have been a little bit too far, it leads us to the conclusion that the opportunity for growth is definitely there. Now, it's not likely to be a quick turn. I don't think it'll happen immediately, but I think as interest rates start to come down at some point, the sentiment will start to shift, and most of the time we'll then start to see things happen. You probably won't know that it's shifted until 3 to 6 months after it occurs, and that's normally what we've observed. But I do feel that that worm is starting to turn, and I think that we'll start to see some growth, not necessarily this year, but certainly in the next 2 to 3 years, things will start to move. So thanks very much for joining me for episode 91 of the Rewarding Property Decisions podcast. Please feel free to share the podcast on any of your social medias. We'd love to get some coverage that way. But as always, with family, friends, colleagues, anyone who's got an interest in property. Otherwise, if you'd like further information, please visit our website, wakelin.com.au. Otherwise, we wish you all the best with your property decisions.